We'll see if we can get that trade going again. But okay, let's jump into futures. Futures moving higher. This came, where is that? 12, no, not here. 56. So this is what was expected to happen right about here. It was supposed to make a new high, but did not. It stayed all the way down here till about 4. So what happened here was, what happened overnight here about, let's say about 1 o'clock, 12:30, 1 o'clock here. RBA decision came down. RBA, Reserve Bank of Australia, their decision came down for a pause on hiking cycle. So this is where the futures were decidedly going higher, right? This is exactly where the whole thing shifted, and towards the as soon as the U.S. markets were open at 4 o'clock, it took off, right? So basically, this was the idea here that you see this doji here. So right about here, within these two candles, RBA decision to pause hikes came down. So that's the reason this moved up, and it was supposed to go up to 4170 area and hit that number and take a breather. Let's see, where is that coming from? That is coming from right here. So this is what we discussed yesterday in yesterday's charting, right? 4170 area. This was supposed to get tested. I was expecting a test of this number yesterday itself, but did not happen. We got this number today, uh, be it in the overnight session, but we got that number. Now, if it comes back up, clears this number 4171, very likely it's going to go hit this number 4186 to 4190. Very likely a pause here again. Either a pause, I think, or outright a push to the downside. Uh, Outright push at the moment seems a bit unlikely. Reason being that the Fed is expected to. So for this kind of move, let's say if this kind of move would have happened, during last year's hiking cycle, we would have seen probably 2% day to the downside, but not the case today because we are coming. The understanding is that the Fed is coming to a end of a hiking cycle, right? About one more hike to go. Expectation is that we'll have one more hike in April. Do we have FOMC in April? I'm not sure. But May, yeah, I think there is one more hike coming in. And if the banking crisis is not snowballing into something else, I think there will be one more hike and then a long pause. And probably further down the lane, next week or next year, Q1, or this year, Q4, there will be a rate cut. That's the idea right now. Now, uh, that's the technicals, right? This is the number one, 4171. After that, you're going to hit this 4190 area. So if that clears, probably 4200 would be it for today. But that's not the, and then to the downside, you can expect it to come back into 4140 area again. That is coming from, where is that SPX chart? Uh, so let's go here with the SPX chart. Right, so this is the area. It will come down to 4120 area, 4120, 4125. This area, it should act as decent support. Right now, the delta is about 30 to 4170 was 4140 on SPX. Right now, it is coming down to that 4140 support on yesterday's resistance, today's support. Very likely, if it breaches there, we're going to see it come back into that 4140, 4155 area and hold here for support, right? 4126, 4126, 4125 area for support on SPX. That breaches, I think it's going to come back into 4112. Not really plotting anything sub this number today, but if that breaches, very likely we'll start to price in the 5. Again, this is a hard ask. The 5 on the end, the 5 on the day will move up as the day opens up. As the data starts to populate, this 5, and when the market opens, this will move up, very likely to probably 41 or something like that. Again, the downside risk remains at 41, and support will be about 4125 area. That breaches about 4113 area. That breaches right about here is the support again, just like yesterday. 4100 to 4095 area. Not plotting anything sub today. Cool. So let's get back to ESM. Right. So and and one more chart that I wanted to share is pie chart. I was talking about something else. Anyways, so this is the plan. This was the idea from yesterday. Yesterday we stopped about here 411 something. Today it hit this number 41240. Right. So that's where I got my numbers from yesterday, and that's what I posted. Uh, and that's how I took a trade. But with not, I was not in this trade with size because I think my bias got the best of me. Right, but this technically this was there for to get tested and it got tested. Unfortunately, again, I was not in this trade with scale, so I did not make as much as I could have on that trade. Now if it clears here, then expecting it to move all the way up here into 414, perhaps not a story for today. But as and when it clears here, we'll do this in live, in real time. Perhaps we still have another probably about another 20 points to the upside on SPX, but we'll see. We'll see. Today's it's not that clear, so we'll see because we don't have any lines to go by next. Next, we are looking at the third standard deviation to get tested, right? Right now, it is clearly violating the second standard deviation. That calls for very likely come back into the second standard deviation. If that breaches, very likely we'll see a mean reversion. As of now, the case doesn't seem like a mean reversion. Maybe we'll see it come back into the second standard deviation again at about 40850 area. That's my understanding as of now. So if it's violating the second standard deviation, hitting a major resistance point, then likely scenario we want to see it come back down at least into the second standard deviation line, right? So that's the idea as of now. Expecting these 5 and 8 to move up. So that would be our base case to the downside. Beside, if it breaches below the second standard deviation on the day, that breach happens, then likely we'll start to price in the 5 on the day. Else, we'll still go with the lower time frame here, 15-minute time frame, same thing. Breaching the second standard deviation, we'll again keep this as our guide and take trades based on this. Comes back down, exit at 5, exit at 8, exit at the mean, right? I do believe that it's going to go down, probably test this number, and I think a likely scenario will see a bounce about right about here, 4158, or right about here at within these lines, right? First bounce should come within these lines. That breaches, very likely it's going to come back down into 4150. This is my idea right now. I'm not really plotting this number as of now, but maybe if the selling starts to accelerate, this should be it for yesterday, 4134. Maybe, when I say this should be it, give or take 10 points around this number. So delta is still 30 points. So 4130 would put 4134 would put SPX at about 4105, right? 4105, we don't really have any solid support there. We have support at 41, then we have support at 4095. So from 4105, give or take 10 points for the support on SPX to come into picture. Yeah, so that's the idea here, right? So let's say if the selling starts to accelerate here and starts to come back down, and this area, if it gets hit 4134, I'll start to look for a bounce between 4134 to 4124 area. That's the idea right now. Cool thing. So manage the trade watching this and probably place your trades here, or you can also go down to a lower time frame and start to look for, if it bounces here, you exit the trade. Here this chart is suggesting 5 is done, 8 is done. If the 8 breaches, very likely we'll see a bounce at the 8, and if that breaches, likely it's going to come back down here into 4156 and look for a bounce between these two lines. Right, the mean reversion is about 4153 area. So give or take 4150 is what we are looking to the downside, about 12 points. Right now it's about 10, 12 points, right? So if that breaches, expect come back 4145, probably then here at 4134. This area at about 4134, 4135 seems like a decent bounce spot today. I don't know if we're going to get to that point, 30 points down, 35 points down from where it is right now. But if it could come down to that area, I'll be starting to look for another bounce there. 41 between 4135 to 4125 area. Cool thing. So that's a trade on, and we know the delta, right? We know the delta between SPX and ES right now. It's about 30 points. So we'll go by that. Let's get into Apple. Apple trade right here. It is stalling, right? It is stalling here. and we've been tracking this line for some time, and it went hit there. It is stalling for now, and the signs are pointing to a overbought Apple here, right? MACD is still not there for to curl down, but the signs are pointing on the weekly for a push, if not for a push lower, at least for it to calm down here. Overbought, oversold conditions, overbought conditions, likely scenario. We want to see a breather now. The caveat here is that the earnings, right? Earnings will come through towards the end of this month, so likely scenario, we want to see it stall between here and here, right? Or rather here. So we want to see it stall between somewhere about 165 area to the upside and about 157 area to the downside, right? We don't want to see it. It's better, I think, if it comes back down into the eight. So likely scenario we want to see for that earnings bounce, right? And if the earnings go south, then likely scenario it will come back into the mean, or even it could come back into the second standard deviation about here. So sorry, one standard deviation on the week. So maybe that'll happen, may not happen. We don't know about that yet. But that's a story for earnings. I think the downside play, unless Apple comes out with probably a dire outlook or something, then we might expect to see it come back into this number. If not, we'll look at 5, 8. This is the weekly chart, by the way. The bigger picture comes back into 5, 8 and bounce. To the upside, this is still the point 175 area, third standard deviation. Although I would assume that if it starts to move higher, if it continues to move higher, I'm not chasing this rally. On Apple. Likely scenario, most of the people, most of the funds will not be chasing this rally. Likely scenario, people will be starting to sell into this rally on Apple. So that would keep it stalled, if not, downright push it to the downside into 5 and 8. My understanding is still that it needs to come down into the 5 on the week. That is still the idea there. Probably, I don't know, Joel's report might push it down today. 10 o'clock is the Joel's, and so that, and I think we have another factory orders 10 o'clock, so that might do the trick. So yeah, I'll wait for that to happen. Here's the daily chart. The is expected to move further up. So I'll still be trading as though it might come back into the five. Look for a bounce there, and perhaps if we get the bounce, then probably I will leave the trade alone. But if it breaches the five, then I'll probably look for an eight here. Mean reversion is sitting at all the way down here at about 156. This is not a story for today. Probably going forward into next week sometime. I think this might the mean reversion might happen. But as of now, as of today, not looking for that mean reversion to happen. I'll be careful to watch this trade. If it starts to move to the downside, then I'll look for this five to get tested. If the five breaches, then the eight, right? Same story. It is clearly violating the second standard deviation right now. And if it continues to move higher, then you can expect it to go hit the third standard deviation. Probably, again, if it goes into the third standard deviation, probably people will start to rotate out of Apple. So that's going on there. Now, this is Apple story, that's ES story, and all that. So now let's I think let's stop with the technicals here. Maybe one more we'll do Tesla, and maybe we'll do Microsoft. Hey Marissa, how are you? Your mic is on. Microsoft is again in the same boat as Apple, right? It is hitting the same line and it is trying to take a breather. I would be surprised, if it doesn't take a breather alongside Apple. If Apple takes a breather, I would expect Microsoft to take a breather as well, come back into the five, about 278 or something like that. And here I think these are the Microsoft and Apple both are identical, give or take, on all the time frames. So if Apple starts to move down, I'm expecting Microsoft to move down again. The five would be moving up. So today again, the downside probably is the five. Five would be moving up to 284 or something. In likely scenario, Microsoft will come down into that 284, looking for a bounce. But if that five breaches, expecting it to come back into the eight. As of now, 8 is at 281, but it will move higher as and when the market opens up. Let's go here. 5 breached, 8 will breach. Very likely it will come back into the mean, and we'll look for a bounce. First bounce here, second bounce here, third bounce here. That breaches, very likely it's going to come down into 285. And very likely scenario is this number, a bounce here. Not plotting in anything sub this number, the 50 on the hour, about 283.40, 283.50 area. Very likely it will hold here. By the time it comes down into this number, this will get oversold and it will start to bounce again. I think likely scenario here itself, by the time it comes down into the half trend, 286 area, this will get oversold. Again, look for a bounce. But if that breaches, again, here it would be a bounce, here it will be another bounce, here it will be another bounce, right? So that's, I think, and to the upside, right about here, if it clears 289 area, it's going to go up all the way here into 290 area. So again, I will not be chasing this rally with meaningful size. If I'm trading SPY, and that's the reason I was trading SPY yesterday, because I did not want to, put up anything. I did not want it to be in that trade in a meaningful manner, so I did not go in with scale. So that's why I went with SPY instead of SPX. So yeah, same thing. I'll be doing the same thing again to the upside, but to the downside, I'll be either playing SPX, or if I'm playing let's say something like a Microsoft or Apple to the downside, that will be at scale, or even T triple Q. I'm still holding 100 shares short on that. So if that goes in my favor, I'll scale that trade very quickly. I think if it, if the downside happens, it will happen quick and, in and out kind of thing if you're playing options. But if I'm playing SQ to the downside, very likely I'm okay with that trade to scale that trade, probably into 1,000 shares or 1,500 shares. I'll still not be scaling into a full position of about 2,500 shares or something. I'll still be okay with putting up few more shares on top of my position. Probably scale up to 1,000 or 1,500, pretty much. As of now, yeah, as we speak, it is happening. 5-8 that breaches the mean reversion just about here. Right. So we'll do other stuff like Tesla and all that in real time, but just wanted to talk about oil moving higher. This thing is very important, I think. There you go. And I think oil will test this number going up. It is violating the second standard deviation. I think it will go up to the third standard deviation, 84, 85, and probably take a breather from there. Let's see oil here. Likely scenario, it will hit this number first, 80 to 70 area. I think it will take a breather from here. If the breather happens, likely scenario, it will come back into this 80 70, and again it will start to bounce. So the upside remains here per weekly chart, 80 to 70 area. Downside remains here about 78.30 area. I think it will take a breather here at 80 to 70 area. And post the breather, let's see what happens next. I think the chances are bright for it to go up all the way into 84.60, and probably people will start to rotate out of this trade here. Rotate in the sense, I don't think they're going to short it, but probably exit out of this trade. Now, why am I talking about this? Oil will, as soon as you have oil moving higher, that simply means that everything else will start to move higher, right? Everything, because oil goes into everything, and industrial uses of oil are way more than the travel and all that. So oil moves higher, everything else will move higher. What does that mean? Inflation, right? So oil moves higher, inflation moves higher. It's a direct correlation. So what would that do? That would make the Fed more aggressive, right? Oil moves higher, inflation moves higher, Fed gets aggressive towards their hiking cycle. So now, as of now, what we were plotting in was 5.5. What we were pricing in was 5.5, right? So if the Fed goes beyond 5.5, uh, which as of now I don't think it should happen. If Fed goes beyond 5.5, I think it'll start to break some serious stuff. And no, we'll see how the Jolt report will do today, and what's the state of the economy, and how many jobs are open, how people are behaving with the what the how many people are quitting on their own and whatnot. So we'll see all that data today, and if the data comes in stronger than expected, that means the economy is stronger than expected, and that means the Fed will go beyond that 5.5. So probably if that's the case, then it's a double-edged sword now. So till now, it was pretty much smooth sailing, expecting that the Fed will stop or take a pause, or maybe towards the end of the year cut. But right now, that certainty is gone. That certainty is gone. Now oil moving higher will have two different effects here. One, the inflation will go higher. Fair enough. Second thing, that it would people or the consumers, it will give them a pause from buying that high price items. So less spending, right? Less spending, but the prices are going higher, but the consumer would be spending less. The oil itself is a tax. Higher oil itself is a tax on consumers budgets. So the spending will slow down. If the oil moves higher, the spending will slow down. So that's another thing, right? So gotta keep that in mind, and gotta balance these two acts together. And I think that's where the chop will come into picture, right? So some people would some economists think that Fed would pause. Some economists, as of now, yesterday I was watching Bloomberg. Some economists think the Fed will go beyond 5.5, and depends on how Joel's report, how the basically the idea that Fed will go higher or not would very likely depend on how the job market is faring, right? And if the job market, I'm thinking that the job market by the end of the, right now it's at historic lows, but I think that by the end of the year, I think it will hit somewhere about 4% or something. And if that trend continues, that the job market starts to lose steam, then likely scenario is that we are entering a recession, or rather, recession would be closer than what we think it is. So that's another reason that Fed might take a pause. So these are all moving pieces. So do your own research, understand how all these things happen, and what's the effect of all of this. And besides that, when you're considering all of these things, also consider what is happening in the global global markets, right? The global markets right now, China is doing really well, and with their reopening, and with their corruption curbs. So China is doing really, really well, actually. So if that happens, then very likely you'll see the global trade continue to happen. Asia will continue to do better versus US or a EU. So very likely you'll see a rotation out of or more allocation towards the Asian markets versus less allocation towards the developed market. So that's another thing that you want to be considering. Cool. So these are all things that I'm watching. And these are all things that I'm considering for my trades. And towards the end of our charting session, this is what we're actually looking for, the DXY. DXY continues to make new lows. Probably DXY is headed into this number, 101.52. And if DXY, as long as you have DXY moving lower, there is no pressure on the what you call the tech trade, right? The tech trade will continue to flourish. However, these conditions were different versus these conditions now. When this happened, right? When the oversold conditions were prevailing for the DXY, right here, this was coming down. Now, even though this is coming down, we are looking for ephemeral bounce right about here at the one standard deviation, but this thing is still not there, right? So very likely this would be an ephemeral bounce, perhaps a bounce into the five and start to move down, likely into this number. Even though right now the dollar is coming down, I think the dollar will be in a consolidating situation. Probably downside, we are looking at 100, right about here, 100 to 135. Probably this is within the five, right about here at 102.80 to about 100, give or take. I think in the short term, dollar will consolidate here. So what does that mean? In the short term, very likely the market will either move up or stay just about where they are, right? So market will also consolidate, and if dollar starts to move down here in the short term, very likely I think the tech trade will come alive, and during this into the summer months, very likely we'll see a push to the upside in tech trade. And when I say tech trade, that is about I don't know about what 40% of SPX. The SPX will move higher, and Nasdaq likely will outperform that trade. So yeah, if dollar moves lower, expect that tech trade or Nasdaq trade to move higher. The dollar should not move a sub 100 as of now, where I'm seeing what I'm seeing right now, but dollar will continue to slide lower. Maybe you'll see these bounces happen, but dollar will continue to move lower. Where is this thing? Yeah. We might actually see a bounce just like this one, 5 8, and I will not take DXY seriously until it clears above the 8, or rather closes above the 8. And these spikes, as and when these spikes happen, we'll see the tech trade might dip down a bit. But I think the longer term, until I see this thing curl up again, I don't think dollar will have a lot of strength. I think dollar will be, if dollar closes above this 8 on the day for a bounce, that's when I'll start to look for a dollar all the way up here into the 21, or even a mean reversion, right? So until the dollar clears the 8, I'll not be looking for a serious dollar to the upside, serious bounce to the upside. And until the dollar clears this number here, the 50 MA, I don't think dollar will people will anywhere, or the FX traders, I don't think they'll believe that any bounce under this 50 moving average is sustainable. Very likely, even if it comes back up into the mean, very likely FX traders will start to rotate out of dollar, right? So that's another thing that is happening right now. Cool thing. Do we have to do we anything else that we want to do today for charting? Maybe we'll do a bit of Tesla here. Tesla, I think yesterday was a decent down day. That was by the rumors, sell the news. KWeb, yeah, KWeb. I think, yeah, Tesla and KWeb. So Tesla to the downside. This is the story, just like yesterday. The 5 on the week that breaches the 8 on the week, right about here. I think this will be a very, very, very decent bounce spot, unless Apple and Microsoft both start to move to the downside violently and go negative, probably up 2% or something. That's when I think it will come back down and breach this number about 189 to the downside. Or else, I think this is a very decent bounce spot for Tesla, about 189.80 area. Or rather, let's round Tesla being Tesla, let's round that about 189. That breaches for some reason, will plot it down into this number about 183. Not plotting anything sub 183 for Tesla. I don't think that is that's plausible for today. However, this is the and to the upside again. This should act as decent resistance about 203 area, 202.80, 203 area. This should act as pretty decent resistance for Tesla. If that breaches, likely scenario, I don't know why it would breach that, but if that breaches, let's go here. Where is that Tesla? Let's go here. This and in the bigger picture, this number here, the 200 moving average, 215.80, 215, let's round up at 216, right? So this should act as decent resistance. And if anybody has that, if anybody wants to sell covered calls, yeah, you can do it above this number. And also, this is a short week, so I think you'll keep that premiums for this week. Downside right about here, 188. If that breaches, the mean reversion at about 187 area. Not plotting anything sub 187 for the day. If the selling comes into picture, likely scenario will hit this number. We'll look for another bounce here, the mean reversion basically. I would be surprised if actually it breaches the 50 on the day, but the mean reversion should be it. And I'll be trading here. The mean reversion is done for Microsoft. Is trying to bounce there. I think it will come back down and breach this. Likely scenario, it will come back here into this is Microsoft, by the way. It'll come back into 286 or something. If that breaches, it will come back into this number. And if Microsoft and Tesla move to the down, ooh, look at this. We did not. Right. So this got oversold yesterday. Okay. And we bounced here. Yesterday we got our first bounce here, and second bounce is here, and 5 8. And if it clears here, expecting it to go up and hit the mean just about here at 199 area. The mean reversion should happen at 199, and I think it has still crossed to the upside. A likely scenario, I think the upside is the mean reversion, and the downside likely immediate trade is about 196. That breaches just about here 194 area, and if it comes back into this number, everything is pointing to this number a bounce. The 200 moving average on the hour, and I think the mean on the day, and there is also the 8 on the week. So I think this number right about here, this looks like a decent bounce. Look at this right here. I think this bounce right here is likely to reach up to the mean right about here on the hour. That clears, expected to hit this number 201. And if it comes up to all the way up to 20140 area, I don't think it's going to stop there. Oh, fuck. The market is open. Yeah, I think everybody is here. So yeah, let's see. Market is open. If it comes back up to 20150 area, I don't think it's going to stop here. Likely scenario, I think it's going to hit 203 area. All right, cool. We took a little bit more time. Let's move into live trading, please.